Wow, 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 wow. Did somebody get the number of that truck? What a week it was. All right, everybody, here's our Wall Street winners for January 24th. So as you can see, this is the S&P, which had been holding up pretty well, but broke all kinds of major support here on Friday. Now, one thing that very few people seem to be talking about is that Friday was a triple witching day, which means that all the January options were expiring all in one day. And what that means is that the hedgers, the dealers, the institutions all have to completely reorient their books of hedges and so on and so forth. So we end up with lots of volatility. But also you kind of have to look at it and say it can also be that that's kind of the end of the move. But let's keep taking a look here, okay? So that's the S&P 500 looking bad. The only thing I'd say is notice that the purple predictor is no longer negative. It's neutral. All right, let's take a look over here. So look in the upper right-hand corner. Well, on the chart, you can see the Dow also broke some significant support. And the Dow had just made new all-time highs just, 2 weeks ago, 3 weeks ago. So here we have a market that made new all-time highs 3 weeks ago, and it's moved down sharply. But look in the upper right-hand corner, and what you see is the little green line is collapsing buying pressure, but there's a huge amount of selling pressure. That's the little red line. Now, on the chart, you can see every time that recent times that the selling pressure has reached such peaks. Each one of those was a buying opportunity. Now, a lot of people are talking in the market that buying the dips, the Pavlovian dog response of buying the dips is now going to fail. But of course, you got to ignore those guys because they say that every single time. So the real question is, well, is this a buy the dips moment, or is this the beginning of the big bear market? So I'm not going to answer that question quite yet. Let's keep going and looking at our stats. But what this does tell us is that the selling pressure is overdone. That's what it's telling us. That even if this is a major bear market, it's going to rally here this week. Okay? All right. This week, probably the week after. Now, the NASDAQ has been the leader on the downside. But as you can see, once again, the purple predictor has started to go down at a not as bad a rate as the price action is. The price action is leading on the way down. Purple predictor is not. In other words, the smart money is actually coming in and buying this dip that we're seeing here. Not strongly, not the world's best bull signal, but nonetheless, we are seeing some strength from the purple predictor, showing the smart money is coming into the market. The other thing to look at here is this green line in the background. This is just simply the RSI, but you can see it's the first time we've been below 30 in months and months and months and months. The last time we got close to it was right here, and that was a tremendous buy signal. So we still come back to the question, is this the beginning of a bear market or a significant dip? Now, the other thing to remember is we haven't made a new all-time high since the end of November here in the NASDAQ, and we've officially now dropped 10%, which means officially we're in a correction here in the NASDAQ. Not in the S&P, not in the Dow, but in the NASDAQ. Fully paid up members, we've been highlighting this for, weeks and weeks and weeks. Now, right now, our seasonality is neutral. Why? Because we're in a bullish period and we're breaking down. So it can't be bearish. It can't be bearish because there is no real bearish seasonal period of the time from a big perspective, from a mega perspective. Also here you can see heavy volume on the downside. Also neutral on utilities. Okay, this is one of the reasons why I think we're going to rally. I think that the market is oversold. We just saw too much selling come in too fast. So our RSI indicators and other indicators are suggesting that we should get some type of a rebound here. Not necessarily we're out of the woods, but that we're not going to continue lower more than a day. Maybe Monday is going to be lower, but that's about it. Looking at my seasonality, it looks like Tuesday should be a good up day. So maybe we're down on Monday. Tuesday then begins the rally that we see. Doesn't really matter which of the seasonalities we're looking at. We should get some type of a rally here going into the end of January and into early February. So I think that makes perfect sense to me. Another interesting thing, though, the market, we had been getting a lot of money in the stock market from the bond market. That's what our asset allocation model shows us here. It shows us that tons and tons of money was coming out of the bond market into the stock markets. That reversed. And this is bearish for the stock market because money is now flowing back into bonds. So we're going to look at the risk indicator here next, and then we'll tie them together. So risk has been collapsing for a long time because money was coming out of bonds and into less risky stocks like utilities, consumer staples, and things like that. Now when we tie them together, they don't really want to even be in any type of stock, okay? So they're bailing out and they're getting even more conservative. So we're going to see a narrowing of sectors that are going up. We're only going to see energy go up, utilities go up, consumer staples go up, and I think we're going to start to see precious metals go up. All other sectors are going to continue to move lower. So we're still in this big bifurcated market. Some sectors are in bull markets, some sectors are in bear. Global markets, roughly the same picture. Yield curve continues to kind of grind in a more positive direction. Bonds showed a little bit of strength here. Bond key factors still say we should see higher yields. And let's go back to that chart, which means that bond prices should continue lower. Not real excited about getting short bonds, but there you go. Dollar showing some weakness, actually showing some strength this last week inside of a bear market. Gold, however, I'm getting more bullish there. And for our fully paid up members, we're going to start to enter into the gold market here. We're going to start our gold operations here this week. So, sluggish bull market. Fundamentals remain generally bullish. And the price action is slowly working our way there. So I think if we select specific gold stocks, not all gold stocks, but just get the best of the best out of the gold stock market, I think we can make some money there. Gold key indicators, let's call it neutral, 2 bullishes, so 2 and 1. We were 3 and 0 last week, so a little degradation, but still pretty good price action. Crude oil rallied up to where we said it would go to. Now we need to consolidate. The situation's getting more and more balanced, but more and more balanced in the short run where supply and demand are equal to each other. But that's going to be broken out this year. We're going to see a breakout of that, and we're going to start to see a big move. The trade is talking about $100 oil, but you never really listen to the trade. Why? Well, because they're always bullish. It's like farmers. Farmers are always bullish, right? Price of corn's always going to go up. So you never listen to a farmer. You never listen to an oil guy. Oil's always going to $200 a barrel, so you just ignore those guys. But the chatter is more and more people are talking that way. And Bitcoin breaks down hard. After consolidating for a little while, it's breaking down. Purple Predictor is breaking down as well. So a new leg down on Bitcoin. Now, we're not short. I don't have a position here. But if I had a position, I'd rather be short than long. It's a bear market, don't you know? It's a bear market. Okay, freebies, love having you here. But really, these are times of incredible nervousness. We're going to see tremendous volatility. We're going to see tremendous changes in the market. This is a transitional market year. So we've been in a bull market for 18 months, 2 years. That's over. That's over. Now we're going to have bull moves. We're going to have bear moves, but they're going to be sector, not overall market. So you know what to do. Go to WSW 2021, plunk in your credit card, and let's do some business.